Welcome to your ASX 200 closing bell report for Wednesday, the 11th of March 2026. I'm here to guide you through today's market action, brought to you by V2U Research. It was a positive day on the trading floor. The S&P ASX 200 closed the session at 8,743.5, rising 50.9 points or 0.59%. This bounce provided some relief after a volatile week. Despite the positive daily performance, the index remains down 1.77% over the past 5 trading days. On a year-to-date basis, the market is broadly unchanged as investors navigate complex headwinds. Market sentiment continues to be heavily influenced by geopolitical tensions in the Middle East. Traders are closely monitoring the potential impact on global inflation and commodity prices as the situation evolves. The session's gains were largely supported by the heavyweight mining and banking sectors. These pillars of the Australian economy helped lift the broader index and offset weakness elsewhere. In global news, oil markets remained volatile following reports from the Wall Street Journal. The International Energy Agency, or IEA, is reportedly considering its largest ever release of strategic oil reserves. This move is aimed at easing crude prices that have surged amid the ongoing conflict involving the US, Israel, and Iran. The potential for such a massive release is a significant development for global energy markets. Turning to the technical perspective, the ASX 200 is currently trading above a key support zone near 8,283.2. Technical analysts see this level as a crucial floor for the current trading range. On the upside, 8,940.3 is observed as a near-term resistance level. This is a key hurdle that market participants will be monitoring closely for signs of a potential breakout. The Relative Strength Index, or RSI, over a 14-day period, is currently at approximately 52.96. This indicates a neutral to slightly bullish momentum, suggesting the market isn't yet overbought. The broader observed trading range remains between 8,003.83 and 8,940. Understanding these technical boundaries is essential for managing risk in today's environment. Ongoing geopolitical developments have also influenced expectations around Australian monetary policy. Economists are reevaluating their outlook for interest rates as inflationary pressures remain sticky. Comments from Andrew Hauser have been particularly influential. He noted that failing to respond decisively to inflation could risk persistently high price pressures, a warning the market is taking seriously. Despite the index closing higher, sector performance was actually mixed. 7 of the 11 sectors finished in the red, highlighting the underlying fragility in certain parts of the market. Utilities was the weakest performing sector, declining 1.63%. It was followed closely by information technology, which shed 1.57% on the day. Healthcare and telecommunication services also saw selling pressure, falling 1.37% and 0.94% respectively. REITs and consumer discretionary rounded out the decliners. On the positive side, the material sector led the gains, rising 1.97%. However, the sector remains down over 5% for the week, suggesting this may be a relief rally. The energy sector saw relatively flat performance. Karoon Energy gained 1.34%, while heavyweights Santos and Woodside Energy posted modest gains of 0.1% and 0.4%. The standout individual performer was Lynas Rare Earths, which surged over 16%. This followed a significant update to its agreement for the supply of rare earth materials to Japan. Macquarie Technology Group also impressed, increasing 7%. The move followed reports of a $200 million investment from the National Reconstruction Fund Corporation. In the airline sector, Qantas rose 3%. The airline confirmed it is increasing airfares to offset surging jet fuel prices, which have risen roughly 150% since the conflict began. Mining giant Rio Tinto gained 1.1% after securing funding for its Rincon lithium project in Argentina, a key step in its battery metal strategy. Looking ahead, the market's focus shifts to the U.S. Consumer Price Index data. This year-on-year report will provide critical insight into global inflation trends and consumer purchasing power. Locally, the Melbourne Institute inflation expectations data will be key. This gives us a direct view into what Australian consumers expect for future price changes. If you found this ASX market wrap useful, please like the video, subscribe to our channel, and turn on notifications. For more deep dive insights, visit V2U Research today. Share your stock watch list in the comments below. Thank you for watching. Trade responsibly, manage risk carefully, and we'll see you in the next market update.
Disclaimer: the information contained in this publication is general in nature and has been prepared without taking into account your objectives, financial situation, or needs. It is provided by Titan Securities, holder of Australian Financial Services, license number 307040. It is not intended to constitute personal financial advice. Investing and trading involve risk, and past performance is not a reliable indicator of future performance. You should consider your own objectives, financial situation, and needs before acting on any information contained herein. You should also read our financial services guide and, where relevant, the product disclosure statement and target market determination issued by the product provider. These documents are available upon request. Titan Securities accepts no liability for any loss or damage arising from reliance on this information.